Are you kidding me? If you are retired or you are getting ready to hand in your keys to the working world, you need to wake up and look at what is happening to your hard-earned money. For decades, you have been loyal to the big, traditional brick-and-mortar banks. You know the ones, the huge buildings downtown with the marble pillars and the friendly tellers. But let me ask you a very serious question. Is that loyalty paying you back, or is it draining you dry? Every single month, millions of seniors look at their bank statements and they see it. A $12 monthly maintenance fee here, a $15 minimum balance fee there, and heaven forbid you accidentally overdraw your account, because that is going to cost you $35 pop. It is an absolute outrage. When you are living on a fixed income, whether it is Social Security, a pension, or your retirement accounts, every single dollar matters. You do not have the luxury of letting a traditional bank nick and dime you just for the privilege of holding onto your money. So, let's answer the question that brought you here today. What exactly are Chime's features, and more importantly, is it a safe, smart place for a retiree to put their money? First, let's strip away the mystery and explain what Chime actually is. Chime is not a bank. It is a financial technology company. Because of these partnerships, when you put your money into a Chime account, it is fully FDIC insured up to $250,000. That means it has the exact same federal government backing as the biggest banks in America. If Chime goes under, your money is safe. Period. Do not let the lack of a brick building fool you into thinking your cash is unprotected. Now, let's talk about the features and the real, honest pros and cons for your specific stage of life. The single greatest feature Chime offers is its fee structure. Or should I say, its lack of a fee structure. There are absolutely no monthly maintenance fees. None. There are no minimum balance requirements. You could have $10 in there or $10,000, and they will not penalize you. For a retiree trying to stretch every penny of a fixed income, eliminating those monthly fees is an instant win. They also have a feature called Spot Me. This is their version of overdraft protection. If you are at the grocery store and your bill comes out to just a little bit more than what you have in your checking account, Chime will cover you up to $200 on debit card purchases with absolutely zero overdraft fees. They don't charge you a dime of interest. They just deduct that amount from your next deposit. Think about how much peace of mind that gives you, knowing you won't get hit with a massive penalty just because a utility bill cleared a day early. If you are still receiving a paycheck, or if you have your Social Security check set up by a direct deposit, Chime has a feature that lets you get paid up to 2 days early. Why? Because the second the government or your employer notifies Chime that the money is on its way, Chime releases it to you instead of holding onto it to make a profit on the interest like traditional banks do. They even have automatic savings tools. They have a roundup feature where every time you swipe your debit card, they round the purchase to the nearest dollar and slide that change into your savings account. It sounds small, but it builds up a rainy day fund without you even thinking about it. And for those looking to boost their credit score, maybe you want to downsize and buy a smaller condo, they have a credit builder card. It's a secured Visa card with no interest and no credit check that helps you build a pristine credit history safely. But I am not here to just paint a rosy picture. I need you to stand in your truth and look at the downsides, because Chime is absolutely not perfect for every retiree. The biggest hurdle? No physical branches. If you are someone who loves going into the bank on a Tuesday morning, talking to the manager, and getting crisp cash from a familiar face, Chime is going to feel incredibly cold and isolating. Everything is handled through an app on your smartphone or online. If you are not comfortable navigating an app, checking your balance on a screen, or depositing a check by taking a picture of it with your phone, do not open a Chime account. It will frustrate you. Another major drawback is handling cash. If you need to withdraw cash, Chime gives you access to over 47,000 fee-free ATMs through networks like MoneyPass and Allpoint. That is fantastic. But what if you need to deposit paper cash? This is where it gets messy. Because there are no branches, you have to go to a retail partner like Walgreens, CVS, or Walmart to deposit your cash. While Walgreens is free, other stores will charge you a fee just to put your own cash into your account. If you regularly handle cash, Chime is going to be a major headache for you. Furthermore, Chime does not offer joint accounts. If you and your spouse have spent 40 years managing a single, joint checking account to pay the mortgage and the electric bill. Chime will not allow that. You would each have to open your own individual accounts. And finally, Chime does not natively support Zelle for sending money to the grandkids, though you can work around it using their Pay Anyone feature. So, what is your actionable takeaway? What do you do with this information right now? I want you to take a look at your last 3 bank statements from your current bank. Add up every single fee you were charged. Look at how much interest you are actually earning. Chances are, at a big traditional bank, it is practically zero. If you are comfortable using a smartphone, and you are tired of being robbed by monthly fees, here is my recommendation. Do not close your old bank account just yet. Instead, open a Chime account as a secondary, test drive account. Move a small amount of money over. Set up a small portion of your direct deposit to go there. See how the app feels. Test out the fee-free ATMs in your neighborhood. If you love the freedom of no fees, you can transition more of your money over. But if you find yourself missing the safety net of a local branch, keep your traditional account and look for a local credit union instead. You must be the master of your own financial destiny. Stop giving your hard-earned retirement dollars away to institutions that don't value your loyalty. Stay safe, be strong, and protect your money.